Every generation believes the biggest financial opportunity will come from a new invention: the internet, smartphones, cryptocurrency, artificial intelligence. But what if the greatest wealth-building opportunity of the next 20 years isn't a new technology at all? What if it's something that's already happening, quietly, right in front of us? Over the next 2 decades, experts estimate that nearly $100 trillion could change hands across America. That's not a typo. $100 trillion. Homes, businesses, retirement accounts, stocks, cash. Entire family fortunes built over decades of hard work will move from one generation to the next. Most people think wealth is created by earning more money. But history tells a different story. Some of the richest families didn't become wealthy because they had the highest salaries. They became wealthy because they understood how to keep, grow, and transfer money. And that's where the real challenge begins. Because receiving wealth is easy. Keeping it is much harder. Studies have shown that many family fortunes disappear within just a few generations, not because of bad luck, not because of economic crashes, but because the next generation often doesn't understand what it took to build that wealth in the first place. Imagine spending 40 years building a successful business, working late nights, missing holidays, taking risks that nobody else believed in. Finally, after decades of sacrifice, you've created financial security for your family. Now imagine that everything you've built is gone within 10 years. Not stolen, not destroyed, simply wasted through poor financial decisions. It sounds unbelievable. Yet it happens more often than most people realize. And that's why the coming wealth transfer isn't just about money. It's about knowledge. Because the people who understand how money works won't just inherit wealth. They'll multiply it. Meanwhile, millions of others will receive the same opportunity and slowly watch it disappear. The biggest financial story of the next 20 years has already begun. The question is, when your opportunity arrives, will you be ready? Here's the strange part. Most people believe becoming wealthy is all about making more money. Get a better job, earn a bigger salary, work longer hours, repeat. But if that were true, every high-income earner would become financially free. They don't. Every year, thousands of Americans earn 6-figure incomes, yet many still live paycheck to paycheck. Why? Because income creates opportunity, but habits determine wealth. Imagine 2 friends. Both earn $150,000 a year. The first upgrades everything: a bigger house, a luxury SUV, expensive vacations, designer clothes. Every raise becomes an excuse to spend more. The second friend makes a different choice. Instead of upgrading their lifestyle, they upgrade their investments. They buy index funds, build multiple income streams, avoid unnecessary debt, and let compound growth do the heavy lifting. 5 years later, their salaries are almost identical, but their financial lives couldn't be more different. One owns impressive things, the other owns appreciating assets. That's the difference most people never see. Because our society celebrates spending, not investing. We're taught how to earn money, rarely how to keep it, and almost never how to multiply it. The coming wealth transfer will expose this difference more clearly than ever before. Some people will inherit money and immediately spend it. Others will inherit the same amount and quietly turn it into even greater wealth. Money itself isn't powerful. What you do with it is. And that's exactly why the next chapter becomes so important. Because the biggest threat to your financial future isn't inflation, it isn't taxes, and it isn't even a market crash. It's something much closer to home. The decisions you make when nobody is watching. Ask almost anyone what destroys wealth, and they'll probably say, inflation, taxes, a recession, or a stock market crash. Those things certainly matter. But history suggests something else has destroyed more fortunes than all of them combined. Lifestyle inflation. It's the silent habit that grows every time your income grows. You get a raise, so you buy a nicer car. You get promoted, so you move into a bigger house. Your investments perform well, so you reward yourself with things you never needed. At first, it feels harmless. After all, you've earned it. But over time, your expenses begin to rise just as fast as your income. And before you realize it, you're trapped. Not because you don't earn enough, but because you've built a lifestyle that demands more money every single month. Now imagine two families. Both receive an inheritance of $2 million. The first family sees it as permission to spend. The second family sees it as responsibility. 10 years later, one family is asking where all the money went. The other is planning how to pass even more wealth to the next. Every major financial shift creates two groups of people: those who chase the headlines and those who quietly build wealth behind them. Think about the gold rush. Most people dreamed of finding gold, but many of the biggest fortunes weren't made by miners. They were made by the people selling shovels, tools, and supplies. The same pattern appears again and again. During the internet boom, thousands of companies disappeared, but the businesses providing the infrastructure survived. Today's AI revolution is no different. Everyone wants to own the next trillion-dollar company. But history suggests that the biggest winners are often the businesses powering the entire ecosystem. The companies building chips, cloud computing platforms, energy infrastructure, cybersecurity, data centers. They're not always the most exciting names, but they're often the ones collecting steady profits while everyone else is chasing the next big thing. This is where patient investors think differently. They don't ask, what's popular today? They ask, what will still be essential 10 years from now? That's a much harder question, but it's usually the more profitable one. Markets are full of distractions. Every day there's a new prediction, a new crisis, a new opportunity that's supposedly too good to miss. Most of it disappears within weeks. Real wealth rarely comes from reacting to every headline. It comes from staying focused on long-term trends. The people who become financially successful aren't the ones who correctly predict every market move. They're the ones who avoid making emotional decisions when everyone else is panicking or celebrating.
Imagine two investors. They both start with the same amount of money, the same income, the same opportunities. But over the next 20 years, one quietly builds financial freedom. The other constantly feels like they're falling behind. What made the difference? It wasn't intelligence. It wasn't luck. And it certainly wasn't timing every market perfectly. It was consistency. The first investor understood something most people ignore. Wealth isn't built in dramatic moments. It's built through ordinary decisions repeated over and over again. Buying quality assets, ignoring market noise, staying invested during uncertainty, and allowing time to do what no person ever could. Compound growth. Albert Einstein supposedly called compound interest the eighth wonder of the world. Whether he actually said it or not, the principle remains true. Small amounts, invested consistently, can eventually become life-changing sums. But there's a catch. Compound growth only rewards one type of person, the person who's willing to wait. That's why so many people fail, not because they choose bad investments, but because they expect extraordinary results in just a few months. When they don't see instant success, they quit. They chase the next trend, the next hot stock, the next social media prediction, and in doing so, they reset their progress again and again. Meanwhile, patient investors continue moving forward, slowly, quietly, almost invisibly, until one day, the gap becomes impossible to ignore. Financial freedom doesn't usually arrive with excitement. It arrives with discipline, with patience, and with thousands of small decisions that nobody else notices. Because in the end, the greatest investment you'll ever make isn't into a stock or a company. It's into your own ability to think long-term. And that leads us to the most important lesson of this entire story.
Let's go back to where we started. Nearly $100 trillion is expected to change hands over the next 2 decades. For many people, that number sounds impossible to imagine. But here's what matters. You don't need to own $100 trillion. You don't even need to inherit $1 million. Because the lesson was never about the amount of money. It was always about the decisions behind it. History remembers the fortunes that lasted for generations, but it also remembers the fortunes that disappeared almost overnight. The difference was rarely intelligence, it was behavior. The people who built lasting wealth understood one simple truth. Money is a tool, not a trophy. The moment you start treating money as a way to impress other people, it begins losing its power. But when you treat it as a tool to create freedom, everything changes. Freedom to choose where you work. Freedom to spend time with your family. Freedom to retire on your own terms. Freedom to help the people you care about. That's what wealth was always meant to provide. The next 20 years will create incredible opportunities. New technologies will emerge. New businesses will rise. Some companies will disappear. Markets will climb, and markets will fall. But through every boom, every recession, and every headline, one principle will remain exactly the same. People who stay disciplined, keep learning, think long-term, and avoid emotional decisions will continue building wealth while others chase shortcuts. Because financial success isn't about predicting the future. It's about preparing for it. So the next time you hear someone promise overnight riches, remember this. Real wealth is usually built so slowly that most people don't even notice it's happening.